Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 24th of July. Here in London, I'm Caroline Hetke.
And I'm Lizzie Burden. Coming up today, Deutsche Bank shares tumble as the lender succumbs to its first loss in 4 years.
Tesla profits fall short again as Elon Musk demands investor patience and kicks plans for a robo-taxi down the road.
Plus, hitting the brakes, Eurozone activity comes to a standstill as Germany struggles.
Let's start with a roundup of our top stories.
We've had a slew of European bank earnings this morning. Deutsche Bank reporting its first quarterly loss in 4 years as trading slowed and it booked a charge tied to a legacy issue at its Postbank retail unit. Currently, shares are down 7.8%. This after the German lender reported a pre-tax profit of €411 million versus a second quarter estimate of close to €490 million. A €1.3 billion litigation provision and sluggish FIC trading dragged down those numbers, and the CFO James von Moltke says that charge is now behind the bank.
We're meeting our commitments to shareholders around expense management, so we've delivered the second quarter in a row at a $5 billion expense base. And we're managing the balance sheet and also capital ratios, essentially powering through the setback that we had, which was the Postbank litigation provision.
James von Moltke added that the bank has now fully booked that potential cost. Deutsche Bank is also one of the few lenders that has chosen to take advantage of a downturn in deal-making to hire talent in recent months.
Now to BNP Paribas, which has missed estimates with net income of €3.4 billion in the second quarter. The French bank's results show profit €450 million higher than estimates on surging equities trading revenues, giving a boost to the CEO's plan to raise profitability. BNP Paribas CFO Lars Machenil says that there has been election volatility across Europe.
There was all that uncertainty that all of a sudden started to crystallize out. Yeah, so you saw these evolutions. You saw that what we had in the UK, you saw it in France, you saw it in Belgium, you saw it in many of those countries. And yes, there was some overall European volatility related to the elections that were going on all over the place.
That was the BNP Paribas CFO Lars Machenil there speaking to Bloomberg. The lender's share price is down 2.7% this morning. That adds to the decline in its share price that we've seen since the snap French election was called in June.
In other bank earnings, Santander beat profit expectations in the second quarter, even as net interest income slowed. Spain's largest lender posted a profit of €3.2 billion compared to the €3.13 billion estimated by analysts. But a surge in interest income over the last year and its half is now slowing as central banks turn attention to rate cuts. Santander overtook BNP Paribas earlier this year to become the European Union's most valuable bank on the back of those record profits and increased plans to return capital to investors.
Meanwhile, LVMH's shares are down more than 5% in trading this morning after the consumer giant reported muted sales for the last quarter after market yesterday. Bloomberg's Tiwa Adebayo has more.
Its brands include the likes of Louis Vuitton and Fendi, but household names weren't enough to bolster sales at LVMH last quarter. Wealthy customers reined in spending, resulting in a 1% rise in organic revenue from the fashion and leather goods unit. That's just half the gain analysts expected. Demand was coolest in China, which saw sales tumble 14% during the quarter, although the slump was partially offset by strong spending from Chinese travellers overseas. Savvy shoppers from the country took advantage of the weak yen, prompting a 57% increase in Japanese sales. But LVMH's CFO says the practice is hurting their margins. In London, Tiwa Adebayo, Bloomberg Radio.
Meanwhile, Tesla shares have fallen after the EV maker reported a fourth quarter in a row of disappointing profits. The company's operating income was $1.6 billion compared to estimates of $1.8 billion. The electric vehicle giant also admitted that it won't unveil a highly anticipated robo-taxi until October, and that'll only be a prototype. During the earnings call, CEO Elon Musk discussed the delay.
I wanted to make some important changes that I think would improve the vehicle, sort of the robo-taxi, the main thing that we're going to show, and we're also going to show off a couple of other things.
Musk's company is far off the pace of the 1.8 million cars it sold last year and warned for a second time that it expects to see a notably lower growth rate in 2024. Tesla shares fell 8% in extended New York trading, eating into the stock's recent rally, but not fully erasing it.
So that's all the earnings. A note, though, from politics. Presidential hopeful Kamala Harris is vowing to present her political record against rival Donald Trump's. Speaking during her first campaign rally in the swing state of Wisconsin, the vice president sought to draw a stark contrast between their agendas.
Do we want to live in a country of freedom, compassion, and rule of law? Or a country of chaos, fear, and hate?
Vice President Kamala Harris speaking there at an event in Milwaukee. The likely Democratic nominee also promised to focus on healthcare and childcare if elected, stating that building up the middle class would be a defining goal. Meanwhile, the Trump campaign has complained to the Federal Election Commission that the transfer of Joe Biden's $96 million in campaign funding to Harris is unlawful.
And to UK politics now, where Keir Starmer has suspended 7 of his own MPs for rebelling on a key vote. It comes as the new UK Prime Minister met 150 business leaders to promise stability and called for a new partnership with the private sector. James Woolcock has more.
Keir Starmer suspended 7 of his own MPs for daring to vote against the new government last night. It's a ruthless move designed to send a firm signal to his party. Rebellion, especially from the left, will not be tolerated. The decision also showcases Starmer's large majority. A less powerful Prime Minister would have needed those votes. But it remains to be seen if the move will end the issue or sow the seeds of further internal disagreements to come. In London, James Woolcock, Bloomberg Radio.
And those are our top stories for you this morning. But we should take a moment to think about the PMI data and what it shows for Europe. The overall figures were pretty interesting. I mean, European manufacturing in July still in this slump. Services, though, managing to see some gains in positive territory, but not as much as had been forecast.
Yeah, this weakness is the sort of data that Christine Lagarde was talking about in Frankfurt last week when she was saying that actually it would make sense to look and wait till September when they have more data on the health of the Eurozone economy. You've got euro dollar down off the back of these PMIs by 0.25% at 108. So that would suggest that actually the markets are reading this dovishly and that potentially that September cut is on the cards.
Yeah, I will just note, though, the UK's composite PMI for July, 52.6, compared to France's 49.5, Germany 48.7. The July manufacturing PMI for Europe was 45.6. I mean, yeah, very, very difficult manufacturing moment. And as you say, plays into the ECB. So that on the PMI figures. Let's also think about the earnings season, though. The European investor reaction now after Santander, BNP Paribas, UniCredit beat estimates. Deutsche Bank took that hit on litigation and also a miss in terms of trading revenue. Bloomberg's EMEA head of finance and investing, Tom Metcalf, is here to discuss. Tom, great to see you. What's driving the issues then around Deutsche Bank? Is this a blip? Is this the litigation? Is it something more serious?
Yeah, it's sort of a classic Deutsche Bank quarter from the old days, actually. This is the first time they've posted a loss for, I think it's 4 years. And as ever, it's sort of these kind of idiosyncratic surprises that, they've been trying to stamp out. So the big reason they posted a loss was this massive provision against Postbank, which is this retail bank it bought. Now it seems that the German government is likely to sort of, there's a lawsuit where it seems that they're going to have to pay up about 1.3 billion. At least that's the estimate they're providing for. And as I look at all of these results, it's very difficult to get a through line across all the banks that are reporting today. So as you say, Deutsche Bank shares really down dramatically. They said they'll scrap the buyback in relation to the provision in. But then you look across at Santander, that's a pretty good set of results. But swing over to Paris, BNP Paribas, not so good. They had a very, very strong quarter in equities, which is a fascinating sort of aspect of the capital markets right now. And then in Italy, UniCredit, which, I think of all the banks has been doing phenomenally in terms of at least share price performance, up more than, I think, 50% so far this year. Again, strong set of results, but I think there's probably a bit of a sense that, that's all being priced in because the shares there are also slightly down.
Yeah, interesting to see that kind of mixed reaction, not exactly what you would expect. It was also interesting to hear Ollie Crook, our colleague, interviewing the CFO from Deutsche Bank earlier, and him trying to say, all of these issues with Postbank aren't going to dent the medium-term plans to return capital to shareholders. But evidently, traders not buying that this morning. How come you're seeing this charge so much overshadowing the operational strength at Deutsche?
Yeah, I particularly love it when the Deutsche Bank CFO is on. He is extremely sort of understated, and you really have to listen quite carefully in case there's something material being said. I think this was expected. It was known there was going to be this provision. I think, that's really the story behind all these banks is shareholders to sort of justify holding them given the political risks, the regulatory risks. They want those buybacks. And Deutsche Bank now saying, hey, we won't do a second one. While that's expected, I think the confirmation of it is sort of really dents that story they're saying of, hey, we're going to pay back 8 billion over the next few years. Now they're saying, hey, we'll still do that. But you can understand why shareholders, a bit more cautious. And of course, for all these banks, all the shares have enjoyed a pretty strong performance recently, so there's a little bit of kind of pullback there as well.
Yeah, absolutely. I mean, throwing forwards, though, how does the rest of the year or the next 12 months look for these European banks? I mean, surely the volatility around the French election, that's not going to last. I mean, will that be replaced by US presidential race volatility or other political volatility? And how do they see things going forwards?
Yeah, I think there will. Yeah, it's a year for a lot of market volatility, so I reckon you might well still see sort of continued outperformance, particularly on the equities side, even amongst European banks. And that's why it's a bit of a head scratcher this earnings season so far, because it's not like every bank is posting incredible, kind of NIM or the rate rise environment. It's very much case by case. Santander doing very well, but it's exposed to Spain and Brazil. And then you look at, say, a BNP Paribas, and the story's a bit less sort of positive there on the rate environment. So I think we'll just see a divergence, and basically it's how banks execute their own particular markets and challenges.
All right, Bloomberg's EMEA Head of Finance and Investing, Tom Metcalf, we thank you. And we're going to go to another Tom M now on more earnings, because we've had somewhat of a disappointing start to the Mag 7 earnings out of the US. We've heard from the likes of the Google parent Alphabet and Tesla, and Tom McKenzie, our anchor, of course, has been passing those earnings. Tom, what stood out to you?
Well, we can start with Tesla because it's a smaller company by market cap to Alphabet, but it is interesting on a number of fronts in terms of what Elon Musk is trying to convince investors of. He's trying to convince investors to basically hold the line, because this is a company that is facing challenges this year in terms of sales. So we've seen a fourth straight consecutive quarter where earnings have missed estimates, and we've seen an overall slowdown in EV sales, not just Tesla but other companies as well, and a price cutting war. So they're suffering from that. But what Elon Musk is pitching is that in the years to come you're going to see a turnaround. Part of that is going to come down to new models hitting the line, so a cheaper model that's going to come online potentially as early as the first half of next year, a robo-taxi as well, and then this humanoid robot, which is very futuristic, maybe being sold in 2026. The problem is those timeframes are a little uncertain. He's pushed back the robo-taxi already. It was meant to be August, now he's pushed it back to October. That's only going to be a prototype. We have no idea when it's actually going to hit the market. And the model lineup really needs to be refreshed. And there's a little uncertainty, quite frankly, as to whether or not they can actually start producing those cheaper models in the first half of next year. And then there's the question of tariffs, which is really fascinating. He's supporting President Trump. President Trump says he's going to put tariffs in place. Tesla will be impacted by that, in theory. So he has paused the build-out of his factory in Mexico until they wait for that result in November.
Well, although Musk was asked about that on the call, and he was saying that he thought that the Trump tariffs would hurt his competition more than they would hurt Tesla. He had some caveats to it, for example, in the long run and so on, but still quite
well, he said, so he was saying that the removal of subsidies, which is part of the Inflation Reduction Act, which has benefited Tesla, you get about $7,000 in terms of off the price of a Tesla as a result of the Inflation Reduction Act. If that Inflation Reduction Act is unwound by a Trump administration and those subsidies are removed, then he said it would impact Tesla, but it would be far more detrimental for their competitors, and that longer term Tesla would probably benefit. But he did say there's no point investing in Mexico right now because of the threat of tariffs, and so they have put that factory on hold.
I'm sorry, but when he's dangling the robo-taxi and the humanoid robot down for further and further away, surely investors are just going to be hugely disappointed by that. It just seems to get pushed back and back and back.
It does, and this is a stock that's not trading at a cheap premium. It's trading at a high valuation. There is a premium to this stock. It's essentially flat year to date. It's seen a bit of a run up in the last few months. It's currently down on the back of this news by about 8%. That was the move lower. So let's see if more investors bail on Tesla. Others, of course, would say, look, this is a company that sits on this huge amount of data. They're building out AI as well. That's part of the mix there. And that when it comes to autonomous, if any company is positioned to take advantage of that, and we've been talking about autonomous driving for a long time, but if it finally comes to fruition, then Tesla, the argument would go, is very well placed to take advantage of that.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.